Welcome back. I got Gerry Hays on the line. Jerry, how are you?
I'm great. Michael, how are you?
I'm really good. I've been looking forward to this conversation for a bit now, so I'm really glad to get you on the show finally. So why don't you share a little bit about you and then we'll jump into the conversation.
Yeah, sure. So I've been a professor of venture capital for the last 21 years. I've been a founder previous to that. I've invested in about 75 startups. We're looking at the world today to see kind of where startups are heading. Obviously, AI is making a big play into the world of business, and there's going to be a ton of startups that are utilizing AI, so AI agent startups. And what we're doing is helping founders create startups using these latest technologies, but we get them started with a grant. And that grant is funded by a lot of different people in small increments to get them started. And then what happens is if a business opportunity arises from that, then everyone has an opportunity to invest in their seed round and take advantage of what could be a $1 billion opportunity.
I love that you do that because there are so many small businesses that never come to fruition because they don't have access to the capital to kind of get them, through those early stages. I worked for an internet market company back in 2000 during the dot-com fun, and boy, was that a
Mm,
zoo. It was fun. I mean, I remember
yeah.
because I worked in IT. I left accounting and went into IT because I kind of did both things early in my career. So I left accounting completely, went into IT, rode the dot-com wave, which was just silly because, and I was in Chicago too, so one of the big, tech cities, not as big as Silicon Valley, but still a lot of tech innovation going on in Chicago. And I had recruiters that would place me, and then they'd call me up like 6 months later, and I thought, oh, you're just checking to see how I'm doing. They're like, no, no, we got another opportunity for you that pays 25 grand more a year. Well, you got my attention. Okay, what's it about? And it was a great way to boost, the career salary thing. It was just complete chaos and zoo. And you look and if colleges did textbooks on it, it's like, okay, this is not the norm, and it wasn't. And then reality hit, and boom,
Right.
and that was that. Then I went back to counting beans and some other work too. And but I really enjoyed that time. But getting back to my point, it was, a startup. They had several rounds of, funding. Now, thankfully,
Mhm.
their founders were part of they had left a much bigger organization. So they left and spun this off on their own. So they had the relationships, they knew the game, they knew, who to call and how to propose and get the funding. But a lot of people that have something that's really cool, whether it's a service or software as a service or, a product or something like that, they need this type of, funding. So eh, again, what you're doing,
Yeah,
all of a sudden, go ahead.
oh, I was going to say that, Michael, you're so dead on. And the thing is, what's happening, there's some macro things that are happening, right? The cost of getting a business off the ground has shrunk by 100-fold since the dot-com days, right? So the cost of getting started is a lot less, but those are still real costs. And then to get someone started, if they only less than 1% will raise money from angel investors or venture capitalists to get started. So where do they go? They raise money from family and friends, or they're using their own checkings account. That's what I call toxic risk, right?
Mm.
And there's enough risk as it is to start a company and work on a company, but to use your savings account or use your family's money in big increments, it's very toxic. What we do, we created and invented a new system called venture staking, where you can sign up as a venture staker. You can see these projects. You could stake as little as $10, right? But what that does is locks you in the right to invest in each of their future rounds and at 10x your venture stake. So if you think about what a founder gets, they get to build a community early on, they get capital to start and to experiment. And then if and when they come up with something really interesting, they've already got a community ready to invest in them. And that's a whole new pathway to raising capital, capitalizing your company, other than having to go the traditional VC route.
And what I like about that too is, when you think about traditional investing for a second, we'll just say the stock market for a second. Okay, so you
Mhm.
buy stock. Are you really vested or interested in the company? No, you want to see what their results are. Okay, what's their annual returns looking like? How are they growing? Are they expanding their market share? It's more transactional. But
Hmm.
when you get to participate in, this type of investing, where you're part of a community, what it does is you buy in, and all of a sudden you are really interested in cheering them on. It's like going to a Friday night high school football game. You are in the stands and you're cheering on. Maybe you're getting involved a little bit more. Maybe you're like, hey, you know what? I saw this, and you send it off to the CEO because you have their contact information because you're part of the community. It's like, yeah, I just saw this. What about, this? Would this be helpful in all of that? All of a sudden, you become part of the team. You become part of the community, and then if they come up with something, again, like you said, you get that early entry fee because a lot of organizations, even with today where you can get in quote unquote early in some ventures, you're not first round. You're not getting in
Oh
as
no,
early like that.
no.
So, and I'm not going to mention any names because they don't sponsor
Yeah.
the show. But I would, but it's like, no, I'm just being silly there. But I think, again, there's so many amazing, life-changing opportunities that people are thinking about or they're starting to design that
Yeah.
if they have this way, and because of organizations like yours, we're creating that way. And what that does is, and I do a lot of work in workplace culture and burnout recovery and prevention, all that, and people don't like going to work, and and not everybody can be an entrepreneur. I always say that, and I'm
That's
not
right.
being mean by that. I'm like, it takes a certain
Yeah.
level of dedication and guts and insanity, kind of a weird mixture of those ingredients to make it happen. But for those that do have those ingredients, to have this as a potential option, as an opportunity to get just that little bit of funding to actually take it to the next step, again, it benefits humanity. That's when you're investing in a company, whether it's a
Hmm.
startup or somebody, it's an idea, an incubator type of thing. When you invest in that, you are, you're putting faith and obviously some dollars in there. Of course, you want to get a return on it, but again, going back to what I said before, it's that community thing. And I think that's one of the biggest things that I see with people right now is there's a lack of community in a lot of different arenas, and we see it day after day with how people treat each other on social media and
Hmm.
excluding politics and all of that nonsense. There's this lack of belonging, and this is a great way to really cheer somebody on, an organization and individuals, and be part of a community that can just crush it. So I'd love to hear your thoughts on that.
You're 100% correct. And the future of startups, the future of business is really community and networks, okay? Because software is going to be easily replicated. As I mentioned with these AI agents, the cost of creating an AI agent is, 15 to 25,000, it goes up from there. Um, but the software isn't the problem. It's building the networks in the community. And I do believe that the future of the one of the future tenets of our sort of new economic model is going to be ownership, right? And to your point, um, Andreessen Horowitz said something about software is eating the world, but I'm telling you, private capital is eating business, right? Everything's going private, and if you're not participating in this, multi-trillion-dollar opportunity, and if you're not getting in early enough, to your point, you don't get any of the alpha, and you don't get to share in that ownership side, but you also don't get to share in that community of building something from nothing, sort of that alchemy and all the learnings that come from that. So if you can imagine someone, they have a $500 budget and it's like, I'm going to venture stake $10 in 50 different founders, right? Now you're on 50 different learning journeys. You get to see how they're all performing, and it may inspire you to be an entrepreneur at some point, but you may get connected to a few of those that end up becoming billion-dollar companies, and you've turned a few $100s into 25, 30, $40,000 by virtue of being connected and being there early. And so you get this massive upside opportunity, and if you diversify enough, you're just by the laws of venture, you're guaranteed to earn two or three extra money if you play the game as we instruct it. But you get that community side of it. You get that connection to something much bigger than just you as an individual, and it's a great learning opportunity.
Yeah, not before I say anything, not investment advice, just an investment conversation, but very, very rare for you to be able to 2 or 3x your revenue stream in trading traditional stocks. And a stat that I share all the time that is just, it blows me away when I think about it, but it makes complete sense because I understand how businesses act and behave, especially the big ones, is, from the year 2000, 52% of the Fortune 500 companies from that year are gone. They no longer
Mm,
exist. And you're like, the biggest companies in the world, that are publicly traded, of course. I know there's some private companies that are just gigantic and make a ton of money. Like the company and the individual that supplies all the cheese to all the US pizza making companies,
hmm.
the Pizza Huts, Little Caesars, Domino's, they all get their cheese from the same dude. And boy, oh, he's a multi-billionaire and you don't hear anything about him. Why? Because he's too busy counting his money and making cheese. So, but those are the rare things. But when you think about more than half of the big boys gone, I agree with you. We are seeing a shift. It's one of those things in history when you look back at history, like, oh wow, that must have been a really transformative period of time. We are in that now, and
Yeah,
sometimes you have to take a step back and look at it and go, this is the wild, wild west. We're pioneers in this type of invention and investing because people want to belong to something. They also want to invest in something that is going to be beneficial to them. And your example you gave a minute ago about, okay, you have a, $500, you know, but you threw $500 into the thing and you're like, okay, I'm gonna invest $10 across 50 companies. And you're like, all right, that's cool. What that does, and this is just from my personal experience, is it causes you to be aware and pay attention and belong and participate instead of kind of passively going through life. You're like, okay, once a week I'm going to go and see how things are. I'm going to look at all the, the reports and all the forums, whatever is set up with it, so you can kind of see where things are. And the thing that came to mind for me is like in this type of example is, I got to tell my friends about this. Okay, I want them to do this so we can jointly go together and then they can, I'm not going to tell them, hey, invest in the same 50 as I do. Go pick your own. But that's one of those areas where all of a sudden you start getting a community as part of the community. Like I want to call it a sub community, but it's still, a bigger community of your
yeah,
friends and colleagues. And you're like, this is some really cool stuff. And look what this is doing. And all of a sudden they're like, oh man, I wish that existed right now. Well, let's start getting some investment dollars so we can kind of help them along with that. And again, it's
yeah,
just it's so cool. And I think back to high school, when they still taught this in high school. I don't know if they teach it now. I don't have any of my kids in high school, so I have no idea. But I remember in one of my business math, I think it was a business math class, one of the assignments is we had to date myself. We had to grab the newspaper, and every Monday we would look at the stock pages where they would list, the stocks from the Dow Jones. And
yeah,
we had to pick a stock, and we had to come up with a report and do all the research. And this is long before the internet, so that was not easily done. Yeah, the Dewey Decimal System. Yeah, but anyway, the library. So the library got to know us. I think that was a roundabout way for us to go to the library. Although I read a lot, so I was already in there. But long story short, it it causes you to research, to not just do surface level things, and that's one of my biggest
mhm,
complaints about social media. And I know I'm kind of going all over the map, but my brain just like it's like, oh, there's so many opportunities here with social media. One of the biggest complaints I have about it, it's like it's level one surface information. It's like it just no one digs in. Someone says somebody said this or this company did this, and we don't look into it. We just kind of okay, and we don't, and we can get upset about it or we're excited about it one way or the other, but we don't take the time to go, well, what's behind that? And again, this is with your system and this platform that creates that opportunity for people to break that I don't call it laziness, but that habit of not being vested and actually dig in and go, well, let me learn about what this company is doing. Let's learn about the founders. What's their background? What are their interests? And a lot of people would say, well, they don't have any experience in this field. Guess what? The only way you get experience is to get experience.
That's right. That's right. And it's amazing how much sort of entrepreneurial learnings fall through the cracks because you don't have this sort of ongoing connection to an audience of investors. I mean, if you go traditional route with venture, you're updating your venture capitalists every week, right? Most who raise money outside of that realm don't have that system of accountability and information sharing, which is so valuable to them as a founder to hold them accountable and to be very forthright with what's going on, the good, the bad, the ugly. All of that gets captured by us. And so when you buy, a venture stake, you're on a learning journey as well as you are on an opportunity journey. And and at the end of the day, what we do know about these sort of high risk, high return startups, out of 50 deals that you'll do, there's going to be 5 or 6 that are really going to figure something out. And that's where you want to invest your capital, right? And if you play that game over and over again, you're going to be learning a ton about business. I mean, and entrepreneurship takes you everywhere, right? In terms of your understanding of business, because you got to think about revenue models, you got to think about capitalization, you got to think about cash flow, burn rate, right? All these basic things that are so critical to a startup. Well, that's every company has to deal with those things, so it just makes you a much more well-rounded individual in the business world as well by understanding how the startups sort of the inner workings of a startup.
And if you're a business owner, it makes you a better business owner because you are
Yeah,
investing the time in learning about things and you get some insights and conversations. And you go, I didn't think about that. It could be something as simple as a different market to approach, or it could be something
yeah,
just, oh, I see this is how you allocate your resources for every
yeah,
dollar that comes in. You have a plan for it. Um,
yeah,
and the plan has to be more than spend it. Okay, there's you got to go a little
yeah,
deeper, folks. I know a lot of people like oh, a dollar
yeah,
came in, I'm going to spend too.
yeah,
You're going to be one of those 52% if you keep that rate up. You're going to have to figure out another way to do it. But
yeah.
I think, w- and why don't we go to this way? It came to mind just now. Uh, the types of companies, I'm guessing they are all over the map as far as what they do. It's not just okay, all these apps or people are just Silicon Valley people that are making apps. No, it's definitely bigger than that. But do you notice, and because you've been at this for a while now, noticing any trends? I know we'd mentioned AI, which I think is an amazing tool. And I encourage people to recognize it as that. It is a tool. Just like the
Hmm.
internet was a tool when it was first released
Yep,
to the masses. It's a
yep,
tool. It's not
yep,
to replace what
yep,
you do. Can it replace some aspects of what you
yeah,
do? Of course. But it's still it's a mechanism to the deliverable of
yeah.
serving customers. So love to hear your
So
thoughts on that.
if you think about again, I love talking to. I am assuming you're a fellow Gen Xer, so in that realm, right? So we've seen a lot, yeah, like to all the Gen Xers out there. Um, but the internet, remember when it first launched, everyone thought, oh, pets.com is just going to win everything, right? There's no reason to have another pet store online because pets.com owns it, right? Everyone quickly learned that this is a very big, big world, and no one is going to just have a domain name and then all of a sudden put something a website up, and all of a sudden you're going to dominate the world, right? Same thing with email, right? But these tools, to your point, if you look at the long tail, email has disintermediated a lot of traditional sales marketing, right? The internet has done the same. If you don't use email marketing, you don't use the internet to market your business, you're really not in business right now. And that's going to be the future for AI, right? If you're not utilizing AI agents in your company to help you grow and scale, whether it's a cheese company, whether it's you're a creator or whatever, these are mechanisms to help you scale your product, scale your service without having to go hire 50,000 people. Now, where that's the old model. The new model is, Sam Altman of OpenAI saying, within the next decade or so, we're going to see a single person billion-dollar company. And what does that mean? It means that they found a way to find a great product market fit, deliver services at scale to that particular target market, which is a large and growing market. So we're seeing this sort of renaissance of using these tools between no code, the internet, and AI to build extremely profitable businesses for less than $1 million, which opens the door for, if you get in early and you're part of the $1 million investment for these companies, and these things blow up to 1,000x, right? That this is how you turn pennies into dollars. And we are in a very, very amazing time period with technology and the costs. And as long as the VCs are paying for AI to keep the costs low, this is the time to build.
Yes, we are the generation that we were originally the remote control for changing the television channels before we got the remote control. So we've seen a lot,
Yes, we have.
and it's been I find it, from, and I can only speak to my perspective as a Gen X. I'm thankful that we have, because we have been agile, adaptive. Some would argue we're quite feral. There's all kinds of, monikers for Gen X, but yeah, one of the things is we've seen so many different things, and we just go, okay, that's the latest new thing. Okay, how do I do it? And we just do it. We don't worry about it. We go, I don't know. We go about that. And I'll ask you one more question, but I want to share a story because you mentioned pets.com. And this goes back to that startup, that internet market research. I'll share their name because they're publicly traded. I don't own any stock in them anymore, so we're okay. But it's called ComScore Networks, or ComScore. I worked for them in the year 2000 to 2003, so it was crazy time and all that stuff. And pets.com was one of our early customers. And when you have a startup, I was employee number 32, and I remember we grew up to about 250, and then we had to let go some of the staff and bring in basically new staff that could take us to the next level that we needed to. So it was a lot of zigzags, and we see that with companies. And it sucks when you see your colleagues get let go, but you need the talent. It's like sports teams. They trade away people that everybody loved, but we need that point guard. And what does that point guard help you do? Win two championships in a row. See the 1989 and 1990 Detroit Pistons for an example on that. But to get back to pets.com, we were growing, and we were, I think, between 250 and 500 employees. And then pets.com, and this was right before, or maybe after, might have been after their Super Bowl ad. I don't remember the timing on it. But long story short, we lost that business. Pets.com said, well, we're going to go in a different direction. So we all know that was one of our bigger clients, and everybody was freaking out, thinking, okay, we're gonna go out of business. We lost a big client. We're dead in the water. The typical sky is falling mentality. So we go to there was a big all-team retreat at headquarters in Virginia, and Majid, who was the CEO at the time, you know, we were all together. We're all had our dinner and stuff. We're all, at this little party thing with dancing and all that kind of stuff. And he grabs the microphone, and he says, "I want to address the elephant in the room. We all have heard that we lost, one of our big clients. I'm here to assure you we're going to be fine, okay? And I don't give a shit about pets.com." Everybody lost it, laughing their asses off. And the company grew and became publicly traded. They're still here today. They, have done a lot of great things. But we survived that. We all know what happened to pets.com. They
Hmm.
didn't. They were one of those big companies that went away. But the story of that is, for every one of those pets.com, there is an Uber, there is a Lyft, there is a DoorDash, there is all these other types of companies that started off with an idea, and they got the investments, they got the money, they grew, and whoever was early on in those businesses have done quite well. And that's where this system is, in what you do, is so critically important, because for the first time, it allows everybody access to it. And that
Right.
changes the game and actually expands the number of new businesses and innovations that we're going to see. So I'll hear your thoughts on that.
That's, I think that's exactly right. And the great thing is that the SEC has passed rules and regulations that allows for non-accredited investors to invest in these startups. That's filing a Form C and running it through a broker dealer or a regulated funding platform. But what we're doing that's unique to this is that we're getting you in even before that, right? Where you just test the waters, put a little bit of capital to work, and then you wait and watch. But when you close that asymmetric gap that most investors have with crowdfunding, like you can look at all these issuance or issuers and like I have no idea what they're doing. I don't know who the founder is. I don't know I don't have any real intimate knowledge of this. We close that. So when, a venture stake deal comes in and you venture stake that founder, you know everything about that company. It's almost like you adopted a puppy, not a dog. You know what I mean? That's 10 years old. You adopted the puppy right after it was born, and you watched that puppy, right? And it's a different mindset, and you're going to have a lot more confidence in deciding, you with your friends and others, whether you should really back them now, really put the real money in, and that it's a fun game to play.
As my 7-month-old puppy's barking abuse in the other room because I put him in his crate, but that's okay. Yeah, we know we're learning more and more about him every day, and
Yep.
he's fun, but boy, oh boy, he claims abuse. I think he just wants to be on the show too. Well, when he gets a little bit older, maybe I'll keep him in the room. I don't know, but right now he'd end up chewing on my network cable, and I'd have to use Wi-Fi on this, so I don't want to
Yeah.
do that. So, how can people sign up and get involved in all of this?
Sure. You could just go to Dorio.com. It's spelled DoRiot.com. And it's actually named after the father of venture capital, George Dorio. And he had one statement that was one of his most well known statements: without action, the world would just be an idea. And so what we're doing is we're getting people to understand if you want to create wealth for yourself, you have to take action.
Mhm.
And if you want to create wealth, you have to take some risk. And what we do is make this calculated risk taking, not toxic risk taking. And there's so much toxic risk taking that happens in the startup world on family and friends or angels over investing. They're doing this, not really knowing what they're doing. We bring you in very, very, bring you in slowly, start small, work your way into this, learn the business, and then, buy options into several founders and wait to see which ones are really doing well. And it's a game of venture that is so winnable for everyone to do it and a lot of fun.
Yeah, it's definitely something I encourage people to definitely look into because again, it's action takers are what make things happen. If you're on the sidelines, you don't get in the game. There's no stats on the back of your baseball card. You got to
No,
get in the game. So Jerry,
you
I've
got
loved,
to get out of the game.
yep. So I've loved this conversation. Any other links you'd like to share with the audience?
No, that would be it.
Okay. We'll definitely make sure we have that in the show notes. So, Jerry, thank you so much for your time today. Really love this conversation and continued success to you and all the organizations you're helping launch and grow and change the world. So, appreciate your time today.
Thank you, Michael. All right. Bye bye.